The most common question among investors: how to earn a full-time income from trading. Only 5% of people actually make consistent profits from trading. There is no magic formula here. Ever since COVID-19 impacted our lives, many people have turned to trading in stock markets to make a living and change their fortunes. This surge in trading activity has helped drive market growth. Nowadays, one of the most frequently asked questions by investors is, how can I earn a full-time income from trading? This has made trading a popular alternative to traditional jobs or businesses. However, as more people see cancers in this field, it has become evident that the entire sector is driven by greed. The reality of trading. Trading is a zero-sum game, and only 5% of traders manage to consistently make money. These successful traders possess a strong arsenal of trading strategies that they follow over time. Combined with disciplined risk management, there is no magic wand in trading. It is a business, and if you treat it as such, you can build significant wealth. However, if you misuse it, the markets will take everything from you. Imagine we put 100 consistently profitable traders in a room and ask them to discuss their trading strategies. While each trader will use different tools and techniques, they all strive for the same goal: to make profits. Some may rely on fundamental analysis, others on technical analysis, and some may even follow their gut instincts and market insights. The key takeaway here is that if all 100 traders can consistently make money using different strategies, then there is no single universal tool or method for success. The core principle of profitable trading profitability is best understood by breaking it down into simple components, with the core principle being expectation. This principle is the common denominator among all profitable traders, regardless of the strategies they use. Now, if I ask you, would you rather risk 1,000 to make 2,000 or 1,000 to make 5,000? The straightforward answer is that everyone prefers a higher profit for the same level of risk. To understand this better, we must consider two essential factors: win rate, win trades. This indicates how often your trades are successful. Win-to-loss ratio. This is calculated by dividing the average profit per winning trade by the average loss per losing trade. For example, if over 20 trades, the average winning trade earns 5,000, and the average losing trade also results in a 5,000 loss, then the win-to-loss ratio is 1. However, if the average winning trade earns 10,000 and the average loss remains 5,000, then the win-to-loss ratio is 2. A win-to-loss ratio of 1 is considered the break-even point. The goal of a trader is to maintain a positive expectation. This means that even if a trader has a 40% win rate, they can still be profitable if their win-to-loss ratio is 2. This is the core concept behind profitable trading, a simple strategy for short-term trading. This trading strategy is trend following, meaning it aims to identify and follow trends in the market. A trend refers to a sustained price movement in a particular direction for a given asset. Trend following means positioning yourself in the direction of the trend. Trading instrument universe. Stocks from CNX Nifty 500. Commodities like gold, silver, and crude oil. Trading system type. Only long positions, buying only, no short selling. Time frame. Daily chart, average holding period. 15 to 60 days, expected trades per year. 50 to 60 trades. Indicators used. Double exponential moving average, DEMA 10 period. TEMA 25 period. DEMA 75 period. These indicators can be found in any charting software. To set them up, choose a daily time frame chart. Locate the indicator section and search for exponential moving average. Add 3 moving averages with the following settings. First EMA, 10 period. Second EMA, 25 period. Third EMA, 75 period. Entry rules. A buy signal occurs when the 10 period DEMA crosses above both the 25 period and 75 period DEMA. Additionally, the 25 period DEMA must cross above the 75 period DEMA. Stop loss. If the trade moves against us, we need to exit to limit losses. The stop loss level is set at the previous 3 lowest low values LLV. Profit exit strategy. Just as we set stop loss levels, we also need a profit exit strategy. In this strategy, we exit the trade when the 10 period DEMA crosses below the 75 period DEMA.